Good evening, everybody. So, welcome to Finet SG with Xian, and we are on episode 4 already. How fast is that? So, Finet SG, just as an introduction, always, it's financial education Singapore, of course, and with Xian. So, we have a COVID-19 specials at this point in time. All right. So, welcome to episode 4. And this is me. I am Xian, and I'm in the business of investment risk management for Unicorn Financial Solutions. So for me personally, I believe in loving life. And if your life is worth living for, then it is worth planning for life. This is what I truly believe in. I am a client for 6 years now, was a client for 5 years. And I have witnessed myself gaining at 25 years old from a $25,000 asset to $200,000 asset just by partnering Unicorn and experiencing all that they have partnered with me. So because of my parents, really want to truly provide for them and give them a good retirement, I decided to come into the business and expound it beyond myself to them, to my loved ones, and also to you friends. Okay, so this is me. And just to share a little bit more on the structure, a very fast one. I've had the blockbuster, the first episode on the 9th of May. So what is the crisis about? How is it affecting us? And what can we do about it? And now we have the weekly 35 minutes of economy updates. Today will be content heavy, I must say. So the economy updates and market updates will be thinner. So case study on DBS, yeah? And bonus only in selected series. So let's see if it's here today. Okay, so this disclaimer definitely to share with you always, especially to new friends, it is just informational. Okay, and if you need any advice, please come to me personally. All right, first question to you guys. Have you thought of owning shares of very large and profitable multinational companies? It's a very good question to ponder. So I would like you to think about this. Okay. Then we have our first up economy update. Well, we've heard, I'm not sure if you have heard about this, but Hertz is going bankrupt at this point in time. They have tried for 2 weeks, so now they are declaring bankrupt. That is the biggest news for this week. And then coming from Volkswagen before, I was interested in car companies, definitely. So Nissan also plans to X over 20,000 workers worldwide. So that is of 23rd May. Then, yeah, HP as well. They have to reduce their workforce and slash salaries. So why am I sharing all this? And Singapore is heading for its worst recession since its independence. And how old is Singapore? More than 50 years old, right? So the economy is shrinking from 7 to 4% due to this COVID-19 impact. And the reason why I'm sharing this is because, yeah, we got to be updated and stay real with the situation at this point in time. So this is what is happening to the economy. And previously, I have shared a lot about Mike Tyson. Okay, Mike Tyson is the one that we thought that we could give a knockout, in just the first round with printing $2.5 trillion in less than 6 months this year. I'm going to speak a bit faster because this is already too many times we talked about it. Versus in the last 6 years, printing of money, quantitative easing for 6 years. So basically, the federal government is trying to print the money and try to exhaust all that they have in just this 6 months, just to save it, in believing that it's just going to be round one. But I believe round two is close. And a teaser for you guys, how will round two look like? So there will be 3 scenarios for next week. Okay? How is it affecting us in terms of financial markets update? So MSCI World Index, it's including the developed countries and also developing countries index. So we can understand at least from 12 February to 23rd March, there was a big dip. There was already a very big recession at this time. Then we understood that it went back up due to the endless printing, the unlimited printing from the federal government. So then now we are actually going on a horizontal line. So we talked about two scenarios in the last episode. So which of the two scenarios do you think is going to happen? And also something for you to ponder about. For new friends, if you don't understand what I'm talking about, of course, you have to ask me in person because I can't repeat it in this chapter. So previously, I asked you guys, because I bring this up for a reason. I asked you guys before, how will a post-crisis world look like? In terms of near zero interest rates, the slow economic growth that we're going to see, and we have already seen that there is a major restructure already, and exacerbated, so massive disruption that is happening. Pandemic is even having my grandparents, to come onto the online session. So looking at this, my friends, if you were to ponder on this, how would you want to invest and keep your assets? Because coming from a near interest rates, we have a few things to consider, right? If you put cash into the bank, it's generally zero interest rate. So you might even have to pay them interest just to keep your money in the bank. Who would want to do that? If we are near zero interest rates, we are very close to negative interest rates as well. So today's topic, we won't touch on so many of this, but more on just the equities. So the green word, equities. Because assets allocation, is something that I can do, but we have to speak in person about this. I can't share in a wholesale just like this. So we will focus very much on the equities today. Okay? Previously, on the 4 types of businesses, again, there were mature and stable, cyclical growth, structural losers, and structural winners. This is the new environment. And may I emphasize that businesses, they can change over time. So whatever type that they are in now, there's a chance for them to change over time. So there is a need for constant monitoring in this environment. And just a teaser for you guys also for next week, because today our focus is on DBS, right? So there is a deeper reading into the 4 types of businesses. But just to let you know, in terms of growth, we have already spoke about it quite some time already. Cyclical growth depends on economy. You remember the sailboat without the engine. Mature and stable, slow, not disrupting people, also not being disrupted. Structural losers, without the economy, already losing market share. Structural winners, they are very fast and they're taking over market share whether the economy is bad or not. So in terms of the other 2 factors, we will share next week. Okay? And I would love to go into detail for DBS because this is really important for us. And for friends out there who are very heavily invested in banks, then you can have a look at this. So in terms of DBS in detail, differentiating 4 types of businesses have 3 things that we have to consider: growth, dividend yield, and risk. Okay, in growth, it talks about 10 years profit growth. Okay, 10 years profit growth, definitely you have to look at it. How has it been over the 10 years? Secondly, profit growth during difficult economic environment. So it's very important now. Are they resilient in the first place? And return on equity. What is actually return on equity? That means if they are looking at 10%, it can be compounded at a 10% year on year. And I will share a little bit more in detail as I go through DBS later. Okay, so for dividend yield, definitely 10 years dividend growth would be nice for us to understand. And also the dividend growth during the difficult economic environment. So this is how we differentiate 4 types of businesses. In terms of risk, we are talking about the future already, because the interest coverage ratio, we're talking about wanting at least 5 times out of it. But the future is talking about a driver of growth that is either remain intact, if not, there is at risk of being disrupted. So the first 2 is historical. The third one is actually on future. So these are the three ways that we will differentiate the 4 types of businesses. And let's look at DBS. So before we look into DBS, we have to take a look at the earnings growth, definitely, dividends growth, share price growth, and also the business drivers on this, so that we can better understand in detail. So in your heart, or you can share with me over chat, is DBS, which of the types of companies is DBS belonging to? So again, for the new friends, if you don't know what I'm talking about, you have to come to me personally already. Episode 4 already. So if you can understand, I will slowly review what type of company DBS is. Okay, so in terms of that, we look at first the earnings per share. So earnings growth over here, you can see for the last 15 years, starting from 2006 to 2019. There are 2 patterns. You can see that the earnings dropped twice. So one more than the other lah, okay? And the earnings declined by 35 to 37% from 2007 to 2009, which was the previous crisis. And their earnings were quite badly affected by the economy. So it took, you can see, over 5 years for it to really recover, okay? But it still faces the economic slow lah. And that's when we have to take note of this kind of companies. So you can see now it's quite dependent on the economy, the way DBS is running its business, or the banks are. So if you look at the global growth, you can actually see that interest rate, I talk about interest rate a lot because banks are very dependent on interest rates. So the global growth trend, GDP wise, if they slow down, if the growth slows, the interest rate follows to be low. So if you can see over here, it's actually quite stagnant, or it even goes down on a little bit. So that in terms of the interest rates by the banks is also quite affected. You can see a total flat line for 5 years. Why am I sharing this? Because it's very important to understand this kind of companies. Okay, this kinds of companies is actually the cyclical growth companies. They follow the economy. So in that sense, if you are looking at all these darling companies, help yourself to take note of the other fundamental factors that we look into when it comes to cyclical growth companies. So secondly, we look at the return on equity. Return on equity simply means it's the money that I invested inside. How much returns am I getting? So looking on the right side, the equity is $52 billion, right, for DBS. Then the profit it made was $6.5 billion. So if you divide it out, it's actually a 12% gain on its equity lah. To be fair, DBS is actually quite a well-run company. I feel that they have been very good because they at least returned to the 2007 peak. And why do I say this? Because in other banks, you can see that something is even worse. But let's see the dividends. So if you're looking at DBS as a dividends for your portfolio, you can understand actually from 15 years ago, 14 years ago, it's already dividends, the dividends per share was already cut during at that time, and it never recovered until recently. So this is how it was because of the slow growth in the economy just now. Okay, so this was what happened. Then to let you know, because cyclical growth is actually looking at a horizontal line and then going up and down. So it's the sailboat without the engine, where it just follows the economy. When the economy is bad, it goes back down. And when the economy is good, it goes back up. But if you look at the trend of it, if your aim is on accumulation, on growth, then this company in itself is actually not very exciting in terms of growth. And the second point for you to take note is timing is so important here if you are holding on to these companies. Why do I say so? Because in order to make profits out of it, you have to buy at low and sell at high. So it's something that maybe only God, no, not only, actually it's only God is is able to predict this kind of highs and lows. So if you were to really want to time this and be speculative about it, I would caution you, because this is actually not an upward trending company to be going for. And it's not the fault of the company actually. I should share a little bit more, because banks in this environment with the low interest rates, which I can share also in detail a bit later, it's not doing well in this environment now, I must say. So other banks, I say DBS is actually doing better because the other banks are doing worse. I mentioned just now DBS is actually back into its 2007 peak, right? And then you can take a look at HSBC at this point in time. It actually went back to its 2009 trough. What do I mean by trough? Trough is actually the lowest point in the recession at that time. Okay, so HSBC has gone back to its trough period. And there are other worse banks that we're talking about over here. So Standard Chartered in its own is below 50% of its 2009 March trough. So in that sense, I mean, the low negative interest rates are actually taking a big hit on the banks. And to share even more about this, Deutsche Bank, this company that has a very good country name in it, in the Germany. So it's already 75% below the lowest 2009 period. So this is exactly what we're sharing, what I'm sharing at this point in time, that the previous crisis, we have already gone below that a lot. And Credit Suisse, also another famous bank, I can share with you, it's almost 72% below the trough. So I would say that DBS is actually doing not bad. And I want to highlight the environment of banks, because the profit drivers, which is the future outlook of this, is important for us to take note. So firstly, is economy dependent in terms of the loans and fees. The economy is good, then there will be more loans, because we are looking at to expand businesses, or we're trying to buy properties for better gains. Then the risk of uncollectible loans is also something now. When the economy is bad, there's actually bad debts for them to write off. So it's important for us to take note whether this is really something that we can consider at this point in time when it comes to low in recession at this point in time. So interest rates margin. So I already shared very clearly that we're going into zero interest rates today. So that is the situation now. And the risk of disruption, virtual banks. So Singapore government has already come up, is giving 2 licenses to virtual banks, to virtual banking. And they have very big bidders like the likens of Alibaba, Singtel, and Grab. So this actually causes a price war, right? Why do I say that? Because if you can recall, when the 4th telco in Singapore came in, what happened to the other 3? They straight away went into slashing of their own prices to stay competitive, to keep the market share. And yeah, price competition never works for businesses, because all they do is just cut prices. So same thing could be happening to banks. If there are virtual banks licenses coming in and there are players that are outside of the banks, then they are in for disruption. So the risk in this manner is something that I would like to highlight in terms of their future of their businesses. So there is something that we need to take note of. All right, just coming back to this in terms of the dividends, like I mentioned, DBS is actually doing not bad. They are quite a well-run bank in my perspective, and also in the environment that is like this, that they are still able to give a dividend of 6.6. So in that sense, even the CEO, DBS, Gupta, is already mentioned that they will not cut the dividends, because at this time they have enough buffer. But if the economy prolongs, then he cannot guarantee that there's no cut in the dividends. So at this point in time, I feel that in terms of DBS, they are still okay for you to keep. But if you have a major stock in it or major share in it, then I would suggest have a look at it deeper. Just assess it more deeper. So my take on DBS in a sense, pros is because they are near 7% interest rates, which is very attractive. I feel that, and also the DBS CEO wants to keep the dividend payout at this point in time. So I would still think that these are the pros. And in terms of cons, yeah, if the economic crisis prolongs and the low interest rates would be actually staying, definitely, then it will be detrimental because it's part of the profit drivers. Dividends could also be at risk if the economic crisis prolongs. Yeah, virtual banks, as I mentioned, at the moment is not a big threat because there's a lot of bidding to do and you have to win. So there will be quite some time, but it could be coming as a surprise if they start strong. Okay, so my final take is I probably, just my own opinion, I wouldn't own DBS or only own it as a very small proportion of my portfolio right now. Okay, so what can we do for our new friends, especially? Two things. Just the first question for you. How would you like to actually outshine your current financial position? So in terms of that, I always introduce financial planning. For me, what I can do, I will share what I can do. What I can do is really doing proper asset allocation for you. Okay, this is what myself in Unicorn that I can really do in terms of planning, making sure that in terms of contingency, you have it according to your own situation, where I have to plan not too much, not too little for you. Because too little, of course, it causes stress. That's very logical. But if it's too much, then you are not achieving your future goals anyway, your future financial objectives. Then risk management, actually what can derail you from achieving your financial independence is always the question. So what is it? What is the risk that can derail you from achieving your financial independence, your financial objectives? Generally, we're talking about big situations where you can no longer earn an income. What are those moments, events that you have permanent loss of income? So that is something for you to consider. And after you take care of these two factors, then we talk about savings and investments. And there's a difference between savings and investments. So that is what I can do. And after understanding some of the questions that you guys have, then I would like to share with you what I cannot do at the moment as of yet. Because I'm not an investment specialist that can do all the technical debates with you. I will be able to share what we have in terms of how we are investing in Unicorn. Because simply put, to bring you there, in our next slide over here, these are the services that we are taking care of our clients with. So the first three were the ones from the previous slide that I was talking about in allocations. Then we have other services that can help because overall, this is your finances. We're taking care of it holistically as a strategist and helping you throughout your journey in the next 20 to 30 years. So it'll be an honor lah. So in this, right, I can help you to understand what I cannot do. So at this moment, I am still not qualified, of course, to do investment specialist role where you talk about all these technical debates that I have been seeing in some of your questions. But what I can really do is take care of the questions and have it addressed to our investment committee. Because in Unicorn, we have an investment committee that has 10 committees, exco members, and also 10 to 20 researchers to help us understand which are the places that we should focus on that can help our clients to create wealth. So from that research, we build the portfolio from there. So in actual sense, yeah, that's how we are planning for our clients. First, we do the asset allocation. Then we talk about, in terms of investments, what is our philosophy and how you can actually grow and create more wealth from your savings and investments portion. Okay? So as an investor, what can you do better in terms of crisis? Crisis is a time of danger and a time of opportunity. So I love this quote by John F. Kennedy. He's always talking about, they always come together. So let's not hide from it. Besides really planning and be vigilant about the danger, also be very open about the opportunity that is coming in. And previously, I've shared about the unicorn strategy is really setting aside sufficient cash and gold to prepare for a solvency crisis, because we are preparing for a round 2, right? And be sufficiently invested to hedge against a disconnect. So again, this is also discussed in the previous chapter, in the previous episode. And talking about equities, I share with you already being highly selective on what we can do in choosing the highest quality. So this was where we stopped last week, talking about China equities funds. We talked about how this is a good opportunity at this time. If you can bring yourself to remember how is the world doing at this point in time, where the US had a big fall, talking between 30% to 40%. So this is actually considered resilient in comparison with them. So basically, we are taking care of our clients through this selection. So China equity funds, and why? So last week I mentioned about this Kuaichou Maotai, this Baijiu, so the top liquor brand. So throughout, before COVID-19, it was already profiting. And when COVID-19 happened, it still faced the profit rise of 16.7%. So in that sense, this is one of the top 10 holdings, number 2. This is why we are going into structural winners. Yeah, I've mentioned this before. Out of the 4 types, we are really researching and analyzing on the structural winners that we want to have. This is part of our philosophy, which I will share in detail in time to come, in the next chapters, because it's important for us to understand why are we even researching in the first place. Simply because we want to create wealth for our clients. So we don't diversify for the sake of diversification, where there could be some financial institutions where they just put it into a lot of regions and then a lot of sectors without much justification. But for us, we are really taking care of our clients by choosing just the top quality companies. And next week, I will help you to understand further why structural winners. And for us, technology funds is quite clear. I think without me explaining much, you already know that it's actually on a very, very good potential for us to go into. It's at 0% at this point in time. And I'll use Microsoft again in one of the funds that we select, because this one is actually the top holdings. So in that sense, Microsoft is earning more and more revenue by the quarter. It's already up 14% from the last time I viewed it in May. So it will continue to thrive because nobody stops using Microsoft just because there's a crisis. People still need to work. So in that sense, Microsoft is still on its way for growth. And that is what we call structural winners. All right, and this very interesting one that probably a lot of people don't talk about is water tech company. At this point in time, let's have a focus on this company called Ecolab. This is what the Bill Gates family organization in their Cascade investments are investing into. So it's talking about water treatment, hygiene, and you know Bill Gates and their philanthropic activities. That's why they're investing in companies like this. So this water treatment has very diversified way of running their businesses. They have more than 20 types of ways to do water treatment for various industries, which I can share in detail when we have more time. So because of that, we have confidence in this water ETF simply because Ecolabs is actually doing better and better despite this whole situation. So same thing, not all companies are suffering, I would say, or going through the recession in the way that a lot of companies are going through. So just need to do your homework. All right, so next episode, there will be a bonus. Next episode is at 8 p.m. again next Tuesday. So economy updates and financial updates, they are definitely there, especially if they are big news. But next week, the focus will be private banking clients. So there is a real case study about one particular client that I would like to share with you about to help you understand how you can further talk about your portfolio. Okay, so leaving you with this last bit from Warren Buffett, you only need to do very few things right in your life, so long as you don't do too many things wrong. So my friends, if you are really looking for a way to create your wealth, just like how I shared in the beginning, that I love my life, okay? And if your life is worth living for, then it is worth planning for life. Okay, this is what I really remember. And our research team, Investco, Investment Committee, is researching in the areas that we are very comfortable with, and we are only investing in what we know. So we just need to do very few things right in our life. And as long as you don't do anything wrong, many things wrong. So I love this from Mr. Warren Buffett. Last but not least, I want to share with you, if you are looking into advisory on cash flow management and budgeting to get started, because we are going for a long haul here. And if again, you are wanting to plan and making sure that you create wealth for yourself, come to me. I can do advisory on cash flow management and budgeting, and also advisory on asset allocation to optimize your returns on investments. Okay, these are the two things that I can do, and I have been sharing with my friends about this. Thank you for the feedback for all my friends, because that helps me to always refine what I want to share and help you guys to be of better value to you. All right. So thank you very much. And at the moment, I will leave the episode 5 registration QR code here. But if anything, you can always look for me in person. Okay. So thank you very much, guys. I'm very happy that I have you guys here in this space. And if there are any questions, please contact me. So good night, everybody.
When it's love